Hello everyone. Today we're going to talk about how to earn money on Web 3.0. As you probably already know, Web 3.0 is a new generation of the internet that offers countless opportunities that were not available before. From decentralized finance to NFT art, Web 3.0 is a place where you can find new ways to earn money and develop. In this video, I will tell you about several ways that can help you make money on Web 3.0. Web 3 is a new era of the internet that is being built on top of blockchain technology. It aims to create a more decentralized and open web, where users have more control over their data and online interactions. The main goal of Web 3 is to shift power from centralized entities, such as big tech companies, to individuals and communities. This new era is marked by the rise of cryptocurrencies, decentralized applications, and smart contracts, which offer new ways of conducting transactions and managing digital assets. In summary, Web 3 is a new era of the internet that is more decentralized, open, and transparent. And it is creating new opportunities for individuals and communities to participate in the digital economy. Investing in cryptocurrency has become a popular topic in recent years as more and more people are looking for alternative investment options. Cryptocurrency is a type of digital currency that uses cryptography for security and operates independently of a central bank. The most well-known cryptocurrency is Bitcoin, but there are now thousands of other cryptocurrencies available on the market. Investing in cryptocurrency can be a high-risk, high-reward endeavor. The cryptocurrency market is extremely volatile and prices can fluctuate rapidly. However, for those willing to take the risk, there are opportunities to make significant gains. One way to invest in cryptocurrency is to buy and hold a particular coin or token with the hope that its value will increase over time. This is similar to traditional stock market investing, but with some key differences. Cryptocurrencies are not regulated by the government or any central authority, so investors need to do their own research and be aware of the risks before investing. Another way to invest in cryptocurrency is through trading. This involves buying and selling cryptocurrencies with the goal of making a profit from the price fluctuations. Traders can use technical analysis, news events, and other factors to try to predict the market movements and make profitable trades. There are also investment platforms that allow users to invest in a diversified portfolio of cryptocurrencies. These platforms typically use algorithms to automatically manage the portfolio and rebalance it as necessary to optimize returns. Overall, investing in cryptocurrency can be a complex and risky endeavor. But for those willing to put in the effort and take the risk, there are potential rewards to be had. It's important to do your research, understand the risks, and invest only what you can afford to lose. Cryptocurrency mining is the process of verifying transactions and adding them to the blockchain ledger. This process is performed by specialized computers that use powerful hardware to solve complex mathematical equations. Miners are rewarded with newly minted coins for their efforts. The mining process requires significant computing power and energy consumption, which can be expensive. However, the potential rewards can be substantial if the miner is able to solve enough equations and earn a share of the rewards. One of the main benefits of mining is that it can provide a passive source of income for those with the necessary hardware and technical expertise. Additionally, mining can help to secure the network and ensure the integrity of the blockchain ledger. There are various ways to get started with mining, including joining a mining pool or setting up your own mining rig. It is important to consider the costs involved and the potential profitability before investing in mining equipment. In recent years, some cryptocurrencies have moved away from the proof-of-work mining model and instead utilize proof-of-stake or other consensus mechanisms. Staking is a process of holding and locking up a certain amount of cryptocurrency to support the network's operation and earn rewards. Unlike mining, staking doesn't require expensive hardware and consumes less energy, making it an eco-friendly alternative. To start staking, one needs to choose a blockchain that supports staking and have the required amount of cryptocurrency. The amount needed for staking varies between different blockchains and can range from a few hundred to thousands of dollars. Once you have the required amount, you can choose a staking service provider or set up your own staking node to participate in the network's consensus process. By staking your cryptocurrency, you help secure the network and in return, earn rewards in the form of additional cryptocurrency. The rewards for staking can vary depending on the blockchain and the amount staked, but can range from a few percent to double-digit percentages per year. However, It's important to note that staking comes with risks, such as the possibility of losing the staked cryptocurrency due to network attacks or other vulnerabilities. Overall, staking is a relatively easy and low-cost way to earn passive income from cryptocurrency holdings while supporting the network's security. It's a popular option for those looking to diversify their investment portfolio and participate in the growing crypto ecosystem. Decentralized finance, or DeFi for short, is a new form of finance that operates on blockchain technology. Unlike traditional finance, which relies on centralized institutions such as banks, DeFi uses decentralized platforms and smart contracts to facilitate financial transactions. DeFi offers a wide range of financial services, including lending and borrowing, trading, and investing. One of the most popular use cases of DeFi is providing liquidity to decentralized exchanges, DEXs, by depositing funds in a liquidity pool in exchange for rewards. Users can participate in DeFi by connecting their cryptocurrency wallets to various DeFi protocols and platforms. By doing so, they can earn rewards for providing liquidity, earn interest on their cryptocurrency holdings, and even participate in yield farming by staking their assets in different DeFi protocols. One of the key benefits of DeFi is its transparency and accessibility. Since DeFi platforms are decentralized, users have more control over their funds and are not subject to the same fees and restrictions as they would be with traditional finance. However, DeFi is also associated with higher risks due to the lack of regulation and security vulnerabilities. It is important for users to carefully research and understand the risks before participating in DeFi. In summary, DeFi is an exciting new development in the world of cryptocurrency and blockchain technology. Participating in DeFi protocols, users can potentially earn significant returns on their investments while also contributing to the growth and development of the DeFi ecosystem. Cryptocurrency exchanges are online platforms where users can buy, sell, and trade cryptocurrencies. These exchanges work similarly to traditional stock exchanges, with buyers and sellers placing orders to buy or sell cryptocurrencies at a certain price. To start trading on a cryptocurrency exchange, you'll need to create an account and provide some personal information. Once your account is set up and verified, you can deposit funds into your account and start trading. One way to earn money on cryptocurrency exchanges is through trading. This involves buying low and selling high to make a profit. Traders can use various strategies, such as technical analysis, to predict price movements and make informed trading decisions. Another way to earn money on cryptocurrency exchanges is through arbitrage. This involves buying a cryptocurrency on one exchange where it is priced lower and selling it on another exchange where it is priced higher. This can be a profitable strategy, but it requires quick and efficient execution to take advantage of price differences. Many cryptocurrency exchanges also offer margin trading, which allows users to borrow funds to trade with leverage. This can amplify potential gains but also increases the risk of losses. Finally, some cryptocurrency exchanges offer staking programs, where users can earn rewards for holding certain cryptocurrencies on the exchange. Staking involves holding a certain amount of a cryptocurrency in a wallet to support the network and earn rewards in return. Overall, working with cryptocurrency exchanges can provide a variety of opportunities for earning money through trading, arbitrage, margin trading, and staking. However, it's important to do your research and understand the risks involved before investing in cryptocurrency. In conclusion, Web 3.0 is a new era of the internet that offers numerous opportunities for earning money and development. From investing in cryptocurrencies to mining and staking, there are various ways to make money on Web 3.0. Additionally, decentralized finance and working with cryptocurrency exchanges can also be lucrative options. However, it's important to remember that these methods involve some level of risk and require knowledge and experience. It's recommended to start with small investments and to do thorough research before making any decisions. It's also crucial to stay up to date with the latest trends and developments in the Web 3.0 space. Overall, with the right approach and mindset, Web 3.0 can be a great source of income and a platform for personal and professional growth. Thank you for watching this video on how to earn money on Web 3.0. I hope you found the information helpful and informative. Remember, the world of Web 3.0 is constantly evolving, so it's essential to keep up to date with the latest developments and trends. By doing so, you'll be well positioned to take advantage of new opportunities to earn money on the decentralized web. If you enjoyed this video, please Please consider subscribing to our channel for more informative content on Web 3.0 and related topics. Also, feel free to leave any questions or comments you may have in the comment section below. Thank you again, and I look forward to seeing you in our next video.